Hey everyone, welcome back to the channel. I'm Tom Wagner with Wagner Consulting Aviation and Tax, the Aviation Tax Advisors. If you find these videos of value, please like, share, and subscribe. Activate notifications so that you don't miss future videos. If you manage, own, or fly on a business aircraft, this video is for you. The IRS has officially launched a major audit campaign targeting personal use of business jets. The campaign kicked off in 2024, then experienced a brief pause. Our sources indicate the campaign is now resuming. In the next few minutes, I'll walk you through exactly what the IRS is looking for, the 3 tax rules at the center of these audits, the financial and reputational risk of getting it wrong, and how BARA, the Business Aviation Reverse Audit, helps you stay compliant and protected before the IRS calls. Let's get into it. Why the IRS is focused on business aircraft. Here's the context. In March 2024, President Biden called corporate aircraft a tax loophole during his State of the Union. A month earlier, the IRS commissioner announced a dedicated audit campaign specifically targeting personal use of business aircraft. Their focus: large corporations, both public and private, large partnerships, and high net worth individuals and family offices. As the IRS commissioner put it, these aircraft audits will help ensure high-income groups aren't flying under the radar with their tax responsibilities. The IRS has trained and deployed a dedicated team of examiners for this initiative. Personal use of business aircraft carries various negative tax implications that are highly complicated. Facts and circumstances and adequate documentation are paramount in securing non-personal status for passengers. Getting the details right is really everything. Let's break down the 3 core issues the IRS will examine. First exam area is taxable fringe benefits for personal use of the business aircraft. Personal use of a company aircraft triggers imputed income to the passenger. Most companies use what's called the SIFL method, roughly equivalent to a first-class commercial ticket. But if passenger classification or documentation is weak, or the SIFL calculation is incorrect, you're focused into the fair market charter value, often 4 to 5 times higher than SIFL rates. That means higher personal tax liability, possible amended tax returns, and for public companies, possibly restated proxy disclosures. The second exam area is the entertainment disallowance rules and calculations. The entertainment disallowance rules have evolved significantly over the last 2 decades from the landmark decision in Sutherland Lumber versus Commissioner in 2000 to the TCJA enacted in late 2017. Certain anomalies are inherent in the proper application of the entertainment disallowance calculation, such as depreciation, timeshare reimbursements, entertainment SIFL, and other reimbursements. In most cases, every passenger on every leg of every flight requires classification as either business entertainment, personal non-entertainment, or commuting. The IRS applies scrutiny to adequate documentation required to support any passengers classified as personal non-entertainment. Significant tax benefits exist when personal passengers are classified as personal non-entertainment rather than personal entertainment. Every passenger classification requires careful analysis. It's a facts and circumstances driven situation which must be carefully considered and fully documented. The third exam area is depreciation, a highly complex area when a business aircraft is used for both business and personal purposes. Significant tax deductions for depreciation can be achieved with proper planning. The current administration has reinvigorated the coveted 100% bonus depreciation deduction that many owners seek to claim in the year of acquisition, allowing you to write off the entire cost of the aircraft in year 1. Personal use of business aircraft impedes the rate of depreciation you can expense. However, Several planning tools are available to secure the desired depreciation levels or to achieve 100% bonus depreciation. To claim accelerated or bonus depreciation, qualified business use, QBU, must be at least 50%. QBU is a complicated two-pronged test, a 25% core business test and an overall 50% business use threshold. The 25% test will be examined thoroughly under the IRS audit campaign if you're selected for examination. This IRS audit campaign has ramifications beyond taxes. Misclassified personal use and or poor documentation can lead to underreported executive perks, triggering SEC corrective filings. In 2024, Boeing discovered over $500,000 in executive travel misrecorded as business. The result? Amended tax returns, amended SEC filings, and unwanted media attention. In today's environment, transparency matters, and one oversight can become an unwanted headline for your organization. Public relations are negatively impacted by the improper classification of executive use of the business aircraft. Let's pivot now to the solution. Introducing BARA, B-A-R-A, your proactive aviation compliance solution. We developed the Business Aviation Reverse Audit, or BARA, to help you identify and fix issues before the IRS does. It's a phased, non-intrusive process. Phase 1, an initial assessment in which we review your aircraft policies and procedures and perform a limited sampling of flight logs, flight documentation, and related calculations for the 3 areas the IRS will be examining. Delivered in weeks, you get clarity fast. We review our Phase 1 findings with you and discuss, if deemed necessary, moving into Phase 2. Phase 2 is a remediation step where we perform a deep dive into problem areas. We quantify exposure, build defenses, and implement fixes. Phase 3 is the monitor and maintain process. Ongoing consulting, quarterly reviews, annual compliance reporting, peace of mind built in. We don't just look at the 3 IRS focus areas, we also review Fed excise tax, state sales and use tax, bonus depreciation eligibility, calculations, planning, and flight department best practices. Clients participating in the BAR process include public companies, private companies, serial entrepreneurs, family offices, and high net worth individuals and families. The goal, proactively minimize risk and maximize deductions. Take control before the IRS does. They're not waiting, they're auditing now. Don't leave compliance to chance. Reach out for a Phase 1 BAR assessment. Reach out to Tom Wagner at tom.wagner@wconsult.avtax.com or direct message us at ATAWCAT on X, which stands for Aviation Tax Advisors, Wagner Consulting, Aviation and Tax. Let's make sure your flight department is audit ready and your deductions are secure. Thanks for watching. If this is helpful, like, subscribe, and share with your CFO or flight ops team. See you in the next one.